QuickBooks Pro Plus Desktop 2022 Sub-Account Categories for Fixed Assets. Get ready because we bookkeeping pros are moving up the hilltop with QuickBooks Pro Plus Desktop 2022. Here we are in our Get Great Guitars practice file, going through the setup process with the View drop-down, the Open Windows list on the left-hand side, Company drop-down, Home Page in the middle, maximizing that home page to the gray area. Reports drop-down, Company and Financial, starting off with that balance sheet, customizing it up top with a range change, 010122 to 123122. Fonts and numbers, picking that font up to the 14 and OK, yes please, and OK. This is where we're going to stop this time because we're focused in on the balance sheet item of the fixed assets, and we're thinking about how we want to be grouping the fixed assets. As we have done thus far, we have been using the grouping that has been given to us by QuickBooks in the chart of accounts that has been set up when we started the QuickBooks system, and the typical policy that we would have as to should I include it in fixed assets or simply expense something will usually be, if it's something that's usually a larger dollar amount item, something that we're going to use for multiple periods in the future, and most likely for small businesses, often you'll be looking at the tax code as well. You say, well, do I have to include it as a fixed asset for taxes? Then you're going to put it up top as a fixed asset as opposed to expensing it at the point in time of purchasing, and then you'll have to record the depreciation, which is a bit more complex of a system to be using. As you're using that system, then as we put things on the books as the fixed assets, we want to be have like a subledger related to the fixed assets. However, that subledger is often a little bit more complicated and a little bit different than the accounts receivable, in that we might not give all the details of the subledgers in the QuickBooks system. We might depend on an outside system, possibly the tax software, for multiple different reasons. Now, we do have a list. You could go to the lists drop-down and go to the fixed asset item lists, which can help you to kind of organize your fixed assets as well. I think we have another section talking about the fixed assets item list that it's kind of a specialty area you could spend more time to look in on. But even when you use that list, it's not perfect. And one of the reasons that you might depend on, say, your accountant at the end of the year is because no matter what happens, you're still going to have to provide them with the information related to your fixed assets, because they will have to calculate the accumulated depreciation on a tax basis at least. And if they're going to calculate it on a tax basis, then your decision is, do you want to just record your items on a tax basis too? Or do you want to have a book basis, which will be different, possibly more accurate from an accounting standpoint, but will then require these two schedules to be generated? That's a lot of detail. That gets kind of complicated in terms of the complexity of the subledger. So here's like an example of a subledger, and it gets a bit more complicated to do that. And so you might depend on the tax software to do that. Also, when you're thinking about these kind of accounts, then anything that's in the past from the prior year, if it hasn't been sold, will remain the same. So if you have the ledgers already set up or the schedule set up, possibly in the tax software, you only need to provide your accountant with the changes, the increases, purchases, and disposals for them to update their depreciation schedules. Then they might be able to provide you then with the adjusting entries that you can do on a yearly or monthly type of basis. So that'd be the general idea. Now, if you're going to do that, then your next question was going to be, well, how should I group my fixed assets here? Because I could just do the two groupings. They only gave me two groups for the fixed assets and just have this full lump sum of basically furniture and equipment, and then one account called accumulated depreciation. Your other option would be to say, well, maybe I'm going to have multiple accounts that will tie into the sub-accounts on the sub-schedule, which isn't in QuickBooks. I'm going to use then for my tax software. So you might talk to your tax accountant, and they might give you a schedule like this, which has the furniture and the fixtures and machinery and equipment, which are standard kind of categories from a tax standpoint. And if you're going to use their schedule, it might be easiest to mirror what they have. So you could just record the total down here and keep with what we have and just record it in one account. Or we could say, look, I'm going to make the subcategories that are going to tie out to the categories that are on this schedule as well. So let's imagine we're going to do that. I'm going to say, here's the furniture and equipment, which here's all the stuff that we're imagining that is in there that adds up to the 98,000 in furniture and equipment, which we have, which we started with here. If I double click, there's the 98,000. And then we got the other 5,000, which I'm going to assume is in equipment, which that would be another category in equipment. We're going to say that was a forklift and a printer or something like that. So those are going to be those two. So we're not going to give all the detail like the sofa, the chair, and so on in our books. We're going to just set up these two categories and then depend on this schedule to basically update periodically from the tax side of things. That's our general concept. So if we go back into QuickBooks, then I'm going to say, okay, I've already been putting this information into here. What I'd like to do is create two accounts now instead of just furniture and equipment. And then I'm going to break out between those two accounts and then two accumulated depreciation accounts that are relative to those two fixed asset accounts. So let's see what that'll look like. I'm going to go, okay, let's go to the lists drop down and let's go to our chart of accounts. And we're going to say that this one, this furniture and equipment, let's just change that to just furniture. And let's copy what they gave us over here. It was furniture and fixtures. So let's do that. I'm going to say, let's make this one account rise up. And I'm going to say this one's going to be edit the account. And let's just make that furniture and let's do an and fixture, which is the tax code name. So there we have that. I'm going to save that one. And so then I'm going to make another one for machinery and equipment, which is the other category we have here. So machinery and equipment. Okay. Going back on in. So I'm going to say, all right, let's go to the rise up and I'm going to say new item. And I'm going to call this a fixed asset type of account and say continue. And then I'm going to say that this one is going to be machinery and equipment tab and set that up. So now we've got that one. And then we've got our accumulated depreciation. Now notice that accumulated depreciation is just one account. I could keep that as one accumulated depreciation, but I'd like to maybe have sub-accounts like they have here, tying in the accumulated depreciation per category. So I'd like to make a sub-account of the accumulated depreciation, making that a sub-account of the furniture and fixture. So I'm going to go on that one. I'm going to go to the account and say, I want to say edit that one. Let's edit that. And I'm going to shorten the name. And this is an abbreviation. I might just call it ACC Depre to shorten it. So I can now have enough room to put this as ACC Depre for the furniture and fixture. It's going to be a sub-account of furniture and fixture. Now it's kind of repetitive to put furniture and fixture. You could leave the name as accumulated depreciation and just put it as a sub-account. But the problem with that is it's a little bit more difficult to actually record your transactions that way, because then you'll have multiple accounts that are basically called the same thing. So I like to abbreviate it instead of having that huge long name, accumulated depreciation, ACC Depre furniture and fixture. And I'm going to say, okay, so now that's in the sub-account category. Then I'm going to do the same thing for a sub-account of machinery and equipment, but have a new account. So account rise up, new account. And I'm going to make that also a fixed asset account and continue. And I'm going to call this again an ACC Depre. And I'm going to say this is for machinery and equipment. So ACC Depre equip. We'll call it equip. And then we're going to make that a subcategory of the machinery and equipment. Right there. And so there we have it. And we'll keep that there. And so I'm going to say save and close. So now we've got this kind of setup where we have the furniture and equipment and a subcategory related to it, and the machinery and equipment and a subcategory related to it. So let's look at the balance sheet, see what we have thus far. So now we've got, it's only showing this one account because there's no activity in the other account. So now what I would like to do is remove and make a journal entry to post into these categories that we have over here. Because you might be saying, well, what do I do if I already have these categories set up? I'm not going to reallocate that 5,000 we just purchased by going into the transaction. We could do that. I'm going to enter a journal entry taking 5,000 out of this 103 and recategorizing it into the other account, which is going to be the machinery and equipment. So I'm just going to go then I'm going to do that with the ledgers because there's no form to do that over here very easily. So I'm just going to go to the lists drop down, chart of accounts, and we have then our two accounts. I'm going to take it out of furniture and fixture and put it into the machinery and equipment. I can do that with the ledger by double clicking on the furniture and equipment. I'm going to do this as of 2/27, and I'm going to decrease, in other words, the amount here, which is going to be for the 5,000, and it's going to go into the other account, which is machinery and equipment, and you might say adjust to the tax depre schedule, something like that. And then that'll take it down to 95, which matches basically we should be at the 98. But that's because they have the accumulated depreciation up here, I think. If I go to the balance sheet, let's check it out on the balance sheet. We've got the 98 right there in the furniture and fixtures, and then we got the 5,000 on down below, which I believe matches out here. So we've got then looking at the 98,000 for the furniture and equipment and the 5,000 for the furniture and fixtures, and then the machinery and equipment at the 5,000. So there's the 98 and there's the 5,000. Now notice here then you have this subcategory related to the furniture and the fixtures, which again is kind of upside down because you would expect the furniture and the fixtures to be first and then the accumulated depreciation, which you could typically fix with account numbers. But we're not going to get into the account numbers right now. And then down here, you only have the one line item for the machinery and equipment because we haven't posted anything to the accumulated depreciation at this point. But you can see how that can give you a little bit more detail now. So if I wanted to see one line item, I could see one line item here. If I want to see the detail, I could see the detail, and I can match this detail then out to the subledger, which we might be getting from our tax professional. We're only matching out these line items now. We're going to talk more about the calculation of the accumulated depreciation and depreciation expense in the adjusting entry column. But once we get to those items, then you can see you can get the book value per category, and those categories still represent then a lot more detail, a list of the actual things that we are having with regards to the fixed assets, those things which we might then use our accounting software or tax software to give us the supporting documentation for it, and then be able to add or subtract to it periodically throughout the month or year, because there's not going to be a whole lot of changes, hopefully, to the equipment because we don't purchase or dispose of equipment on a rapid basis. So we'll be able to track it in that way. So that's a general idea of the subcategorizations. Just realize on the income statement side of things as well, you might record on the income statement, you'll note over here that we have one depreciation account down below. So depreciation expense, you could break out the depreciation expense per category, depreciation for furniture and fixture, depreciation for equipment, machinery and equipment. However, it's not quite as necessary, in my opinion, on the income statement. You might just record it as one line item on the income statement because it's going to record depreciation. It's going to roll into then the net income. And what you're going to be tying out is these items up top. It might make it a little bit easier to tie these items in to the sub schedules that might be generated from tax software if you have the same categorizations, and the subcategories might be useful. It might be easier not to have the subcategories. It's up to you, but it might be useful to have those subcategories and then tie in by a category by category basis. So that's going to be it. Let's take a look at the trial balance. This is where we stand on the trial balance at this point. If we go to the accounting and the taxes, trustee trial balance, range change 010122 to 123122. Customizing that report, fonts and the numbers, changing the font up to 14. Okay, yes please, and okay. This is where we stand at this point. If you're checking the numbers, if there's something off on it, all we changed this time was the balance sheet items up top. But if there's something off, then you can then change the date range, and then hopefully we'll be creating those backup files, and we'll take a look at more detail about the transactions at the end with a transaction detail report of the section.